This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, kicks off today's show with a grain market outlook. Dan discusses crop ratings and what he expects for markets moving forward. The show continues with K-State beef cattle nutritionist Phillip Lancaster explaining how to correctly navigate the hay buying process. Phillip shares how to ensure quality, evaluate price, and the questions to ask before the sale. K-State meteorologist Chip Redmond wraps up today's show with this week's weather update. Chip explains the break in heat and what the forecast for August looks like right now. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our conversation, what are futures looking like?
Well, we've got to the end of the month of July, and we haven't seen any droughts show up. Or if there are concerns in some areas that are pretty wet, that hasn't come forth yet either. The markets are paying attention to crop ratings. And we'll talk more about this a little bit later on, but that's led us to the point where Dees corn closed, on the last day of July, since we're going to use that as kind of our benchmark, closed on at below $4 at $3.99 3/4. And you know, these even numbers are psychological barriers, i.e. reference prices. So $3.99. These corns is a, quote, big deal. And also on the 31st, we closed November soybeans closed at 10.22.5. And, of course, we're in Kansas. We've harvested our hard red winter wheat crop. But overall, generally, we're just so-so for prices. We're really what people are looking at now is probably any old crop sales that they have. You do have new crop price bids available for wheat. We'll talk about that in a minute. But September contract, lead contract, $5.49, again, right around $5.50. You're getting at USDA reference prices for wheat. I think that is $5.50. So that's basically where we're at right now. And it is interesting that now that we're done with this harvest, looking to the next July's harvest, the July 25 contract closed at $5.86 1/4. So it, quote, is as it is. And you know, diving a little bit deeper in the specifics of this, that the trend for corn futures basically has since, in essence, late June, early July, we've moved below about 410, 415, and for that July contract, again closed on middle of the week, somewhere 380, 385, something like that. So we're down from that situation, and the trend, as we talked about, trends in crop conditions, you have percent good to excellent, about 67, 68%, something like that. Really not showing any real problems yet. My only caveat to that would be in some extremely wet areas, Wisconsin, parts of northern Iowa, southern Minnesota, over to South Dakota, even some parts of Nebraska, at least as I look at the moisture maps. If there's any damage to yield that'll come from too much moisture, slower development, well, I don't know that that's going to show up with these crop ratings that we've got. That's just my own concern. So it does leave room for some type of a lower yield than these record high yields that are projected right now. And I know my good colleague Greg Eibendal takes those crop yields, projects them, and my only question for Greg or anybody else using that type of technology is: are you projecting off a long-term yield trend, or are you looking at basically yields for about the last 10 years that haven't been above 177. They've been, when we've had good years, we've been pretty level. So that's the only caveat and question I'd have for Greg and others that do that. So you've got that situation in corn. For grain sorghum, we're sideways to a little bit lower. Again, we're about 58% good to excellent. Of course, more grain sorghum's grown in some tougher areas. in the Western Corn Belt, where if we have had any situation that hasn't been as optimal, it's been there. So here you got corn in some areas of the U.S. coming into dough stage. We're about 35% dough, and still, if we have up and down weather issues in August, that you can still see problems there. But corn as it is, generally, here we've had some major AgEcon meetings of late, where AgEconomists got together, talked about different issues that are relevant. And one overall theme, and at least on the grain market side, is that we're not valuing we don't have any risk premium in these markets. Basically, we're seeing good crop condition ratings, and that especially as you use this kind of numbers-oriented, quantified view of things, that AI trading, a more increased AI trading has brought. Hey, it says if it gets a signal that we've got good crop ratings and we've come through a certain time frame, then boom, we go right to that. We go right to that market outcome with high yields, and we aren't as likely to retain any yield risk yet. And I think it sure seems, anecdotally anyway, just observations in 1 year, that sure seems to be what's happening here. We just don't have any signals that there are those type of crop production problems. So when you look at soybeans, again, the crop ratings for this year are at about, again, 67, 68% good to excellent. You're as high as we've been in any year other than 2020. 2020 had great conditions to start, then moved lower later on after we got through August. So we're entering August with soybeans in pretty good conditions, but we're about 79% of the way to blooming. This was earlier this week, basically Saturday, Sunday ratings came out. Setting pods about 45%, so it'll be 50% now, and just coming into the time frame for soybeans when if we don't have optimal weather, well, there'll be some issues. So that'll be something that the market's watching. But again, percent good to excellent, pretty high. Yield models projecting 52 bushels an acre, like the USDA's, the USDA's yield projection, which was early on, it was just a trend line. Well, now that's becoming what we're paying attention to, just like for corn at 181 bushels an acre. And so with all that, then for soybeans, we've seen the market from, again, about late June on into mid-July, had a one run up to about 10.75 for September. Soybeans closed on Wednesday at about 10.14.5. November new crop to close at 10.39.5 on Wednesday, and again had been up to about $11 and have fallen off. So really, kind of this universal symphony, I guess, and of a unanimous opinion that, hey, they're not going to value much risk in the markets, and so we find ourselves where we're at. If you'd like, we could talk about wheat at this moment if you want.
Go for it, Dan.
Okay, go for it. Thank you. Okay, so you look at the wheat markets. Of course, right now in Kansas, we are through with our wheat harvest. And if anybody still has wheat, it's a storage situation. And we had pretty good numbers, so there's a quantity out there. Exports that have been up and down here. We had 2 weeks ago great exports, just so moderate, if not bearish. This last one, basically around 10 million bushels. Need about 16 to meet the USDA's projection per week, and that's for the U.S. overall. And hard red, we'll see if the pace keeps up for hard red. We've had 1 or 2 good weeks. Of course, low prices help to encourage that too. So anyway, we're when you look at all these markets and see what the lows that they're putting in, and look at the measures of market momentum, like a relative strength index, which at 50% is neutral, 75% bullish, 25% bearish. All these futures basically are hanging around, had gotten up to about 35%, dropped off to about, they're at about 25% now. And it's a universal issue. So we're kind of bouncing along that bearish bottom of the measures of momentum in the markets, and aren't really seeing any news to change things. I think going forward that, we're we are not flying blind. We just don't have any numbers to actually measure yields yet out in the field. Of course, it's somewhat early, so it's really going to bring about a big premium for, yes, the August report, for the August USDA report, and that'll be farmers giving an opinion on what they have in the field. So we'll be watching that. But we'll really watch the September, October, November reports. That's when the USDA, along with farmer opinions, will be considered. And at those, then we'll, by the time we get through September and especially October, we'll really have a better idea if we're really going to attain these tremendous yields that from a modeling point of view we're seeing, or if there are other factors at play.
Dan, with these low markets, what are we seeing for the cash price?
Well, we still see strong corn basis in the western part of the state, 65 over in Garden City and 35 over in Colby, and still 20 over for new crop bids in Garden. You do see decent prices also in Hutchinson area, a little bit weaker, around $4 or below. In other areas, still positive basis overall, weakness in south central, and overall not a lot of change in the other areas. Still the strength of soybean basis bids in the Hutchinson area stands out, as well as this week also in Topeka. Wheat bids still struggling, 10 over at 559 is the highest bid right now, and that's in again, that Hutchinson South Central area. And we are seeing now strong, I shouldn't say strong bids, but we are seeing new crop bids for next year in all these locations. And a lot of them, the highest is 551 in Hutchinson, 550 in Topeka, 546 in Salina, and less than that elsewhere. So we've turned over and are looking to next year in wheat, I guess.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much. Appreciate it, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now, but we'll be right back.
Tuned back into Agriculture Today. I'm Jacob Plowton for Shelby Varner, and we continue today's show by talking about some considerations before purchasing forage for livestock with K-State beef cattle nutritionist Phillip Lancaster. Phillip, thank you for taking the time to join us today.
Thank you, Jacob.
To open up our discussion, Phillip, why are some producers in the state of Kansas needing to purchase forage this year?
Well, we've had a few years of drought in a row, and some places of Kansas still haven't had a whole lot of rain. And so the producers might be looking to purchase hay from different parts of the state than they normally do, or even from out of state, to be able to fill those forage resource needs that they have for the upcoming winter feeding season.
Are there any other instances where producers should consider purchasing additional forage?
It could be if they're in a situation where they only forage they were able to put up with some pretty low quality forage. And so they might look elsewhere to purchase some higher quality forage for specific classes of cattle. So particularly if I have fall calving cows that are going to be lactating through the winter, I would want a higher quality forage for those cows. And so I might need to look elsewhere to find a higher quality forage than what I was able to put up this year.
How should people ensure they are receiving the kind and quality of forage they're paying for?
Well, that's a good question, and that's the biggest question when it comes to purchasing hay is, am I getting a good quality product? And so there's several different things that we can do to evaluate that. One is get your eyes on the forage. Go visit the farm and take a look at the hay itself and evaluate leaf-to-stem ratio. So as forages grow and mature, and when they go from what we call a vegetative state, where there's no stems and seed heads, to a reproductive state where there are stems and seed heads, the digestibility of that forage goes down considerably. And so the highest quality forage is going to be when there's no stems and seed heads present. And then the lowest quality is going to be when there's a very high proportion of stems and seed heads present and very few leaves. And so it's hard to make that guess on how that really affects digestibility because different forage species are different. So, for instance, at the same stage of maturity or the same stem-to-leaf ratio, bromgrass is going to be higher digestibility than native prairie hay. And so there's going to be differences there among species and even with other species, just those two. And so we need to also ask for a forage test. So on the forage test, key things that I want to know protein, and that's a good indicator of quality, but I also want to look at NDF and ADF. Those are measures of the amount of fiber in that plant, and as that plant matures, the amount of fiber increases, and particularly ADF. And so high amounts of ADF will reduce digestibility of that forage. Some other things to think about from that analysis is that I want to have some way to compare that to a standard. So we use things like relative feed value. And so knowing that standard to see where that hay ranks and what's considered normal and good quality. And so there are some extension publications you can find that will help you understand relative feed value. And the other thing is knowing how the producer took the samples that he sent for analysis. Did he just take them off the first cutting? Did he just take them from bales around the outside of the haystack? Or did he actually take a core, what we call a hay probe, and did he go into those bales and do several bales in the stack that you're going to buy so that you have a good representative sample of what's there?
Phillip, how would you recommend producers evaluate a forage's price versus its quality?
So, thing to look at is what's the key nutrient that you're going to need out of that forage and what's the cost per unit of nutrient. So, when you get a forage analysis back on that hay, they're going to calculate a TDN value, a total digestible nutrients, and that's our estimate of the digestibility of that forage. And that estimate is based on the NDF and ADF values that you'll see on that sheet too. But what I want to look at, what's my cost per unit of TDN? Because primarily for beef cows for the winter, my main nutrient of concern is energy, and that comes from digesting that forage. And so I want to know what my cost per unit of TDN is, and I'm going to compare that to other hay sources that I have the opportunity to buy, and then maybe even compare that to some other feedstuffs.
Why is it important for producers to know the average weight of bales or the tonnage of a load before buying?
So that you know how much you're actually purchasing, because cows eat pounds. They don't eat volume. They don't eat bales. They eat pounds. And so if I know I've got 100 cows that I've got to get through the winter, I can calculate roughly how much they're going to eat. So they're going to say they're going to eat 25 to 30 pounds of hay per day. And so I can calculate that out, and I need to know how much if I'm purchasing enough. The other thing is all bales don't weigh the same. So buying on a tonnage basis is much better than buying on a per bale basis, because all bales don't weigh the same. All bales aren't the same size. And even if they are the same size, they're not necessarily wrapped to the same density. And so we need to really buy it on a tonnage basis rather than on a per bale basis.
Should producers be asking how the hay was stored before the sale?
Yes, and particularly how it was stored since the sample was taken for analysis, because how it's stored will affect the quality of the hay that you're going to actually get compared to when that sample was taken for analysis. The biggest thing with storing hay is moisture, and so what you want to look at, was it covered, was it uncovered, was it raised up off the ground so that the moisture from the ground wasn't wicking up into the bale. So some things like that. How much moisture was that bale potentially absorbing as it was being stored?
Phillip, can feeding foreign forages on pasture land lead to unwanted weeds in that area?
Yes, it can. So anytime you're going to bring something different onto your operation, there's the potential to bring seeds from different weed species, or just purchasing very weedy hay will bring in a lot of weed seeds that can then be a problem if on your operation, particularly you're bringing in stuff that's different than what you've had before. So that's a difficult thing to control. One thing we can do is to feed that hay in a dry lot. That would be at least keep it off the pasture, and then you can spray the dry lot and kill those weeds when they come up, and hopefully keep them from going to seed and spreading on across your operation. But it's a difficult thing to control when we're bringing new feeds or new hay onto the operation.
Given the high prices of the current hay market, Phillip, at what point should producers consider an alternative feedstuff?
I would say we should consider alternative feedstuffs at any time because actually the hay is a very expensive feedstuff for producers when we look at it on a cost per unit of nutrient basis. So on a cost per ton basis, it's usually cheaper than most other feedstuffs. But when we look at it on a cost per unit of nutrient basis, it becomes relatively expensive compared to other things like byproducts like distillers' grains or soybean hulls or some of those. Cattle obviously need roughage. We can't go without roughage, so we've got to have some hay. But it may be more advantageous for you to purchase a somewhat lower quality hay if prices are very high. If there's a big gap between very high quality hay and say fair quality hay, and then supplement those cows with a byproduct feed like distillers' grains or something like that to meet their nutrient needs. So producers can work with their local extension livestock specialist, and they can do some math to figure out, okay, if I buy a lower quality hay, how much distillers or soybean hulls or whatever would I have to feed to meet their nutrient needs, and is that more cost effective than buying the higher quality hay?
Once producers have bought their hay, how should they go about storing it so that it lasts a long time?
Well, obviously the best way to store hay is covered in a barn. It's going to last the longest there, but that is expensive. Having enough barn space to store a large amount of hay is not very cost effective. There are some other ways to store hay that come very close. Getting it up off of the ground, so having some big 3-inch rock down where the moisture will drain away, setting bales on old pallets, tires, other things like that to get those bales up off the ground is another way. And then I've seen producers make pyramid out of round bales and then throw tarps over it. So it's covered and it's raised up off the ground, and that comes very close to the hay nutrient savings compared to a barn. Not quite as good as a barn, but very close.
That was Phillip Lancaster, K-State beef cattle nutritionist, on what livestock producers should be thinking about when purchasing forages. I'm Jacob Cloughton for Shelby Varner, and we're taking a short break now, but we'll be back with more up ahead.
You're tuned in to Agriculture Today, and we conclude our Friday show with the weather update with K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, recently parts of Kansas saw a little bit of precipitation.
Yeah, we needed some moisture. We had a really dry last 2 weeks across the state. It's been a bad time for crops, too, where they really need moisture to keep up. And we saw thunderstorms moved south out of Nebraska into central Kansas, and then they expanded south and east from there across most of central and eastern Kansas. We saw some localized amounts up to an inch, and I saw several reports of 1.5 inches, some in the central Kansas area and a couple further to the east. That was needed rainfall. Most of the state averages around 0.6 of an inch of rain. As you get further east, it's a little bit more, and you get further west, it's less. So we got about average precipitation just out of this one rain event for a lot of folks, but there were still some that missed. And as important as moisture is right now, we just need to keep it coming. But unfortunately, we did see some severe weather with that. We had some strong winds. Abilene got hit pretty hard. We had some large hail reports into northwest Kansas. And so it was a pretty active 24-hour period there focused around Wednesday. And that we're not out of the woods with severe weather. We can get severe weather any time of the year. And so just a reminder that Mother Nature still got a lot of potential, but it did bring some relief to the recent temperatures. We've seen 100-degree days for a lot of central and western Kansas over the last several days. That at least took the edge off of it for one day.
What are we seeing for the drought monitor?
Yeah, with those recent dry conditions and combine that with the impressive temperatures, we saw widespread expansion of drought this week. We saw D0 or worse drought, covering about 58% of the state last week to 88% of the state this week. So a huge jump up in abnormally dry conditions. Talking to folks, there's a lot of ag issues. I know some folks are chopping corn already, and I know the soybeans are struggling, and it's pretty early stage for soybeans too. And ponds are starting to dry up in places that we did get some moisture earlier in the summer. We need to keep up. We just need to keep timely precipitation to offset the drought. I mentioned 6/10 of an inch of rain doesn't sound like a lot, but it's hard to get this time of year on a weekly basis. And just taking advantage of some of these rain events hopefully will be enough to have timely precipitation to keep the ag community supported through the summer months, but it's going to be a challenge, I think.
When you look at the forecast, Chip, how likely are we to keep up with average precipitation?
Yeah, so we had another round of precipitation go through Thursday night into Friday for more southern portion of the state. And then after that, things look pretty dry. I don't really see a lot of moisture in the forecast until potentially late next week. In that Thursday, Friday time frame, again, we might see another opportunity for precipitation. We got a high pressure across the west that's rebuilt after it briefly shifted east over the central United States. It moved back westward, and we're supposed to see it basically what we call weaken and basically elongate from east to west and get smooshed a little bit from the north. And that should bring a cold front southward into the plains by late next week. That'll be that focus for precipitation, but it all depends on where that front boundary sets up, because that could be the potential for some good moisture, depending on how far north and south it goes.
Chip, what about for the long-term forecast?
Yeah, so the new August outlook just came out. It has below normal precipitation and above normal temperatures favored for the state of Kansas. It's going to really focus on the tropics, where we've got a tropical disturbance in the Gulf that could potentially become a hurricane. That if we get a potent hurricane to the east, that's going to keep the pattern pretty locked up and not change a whole lot. However, we do have a typhoon right now in the East Pacific. Some of that moisture has been wrapping up around that high pressure and will lead to an increase in moisture late next week. So despite the outlook for August not being overly confident, we can hold hope that maybe we could get some more precipitation than expected out of these tropical sources.
Chip, I appreciate you taking the time to join us once again and give us our weather update.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.